Okay, the SGX is going to is indicating that we start around that 18,000 odd level, and where do we go from there? There is the question. 150 points lower is the start. Anuj is here in the studios. Anuj, we have seen this movie before, haven't we?
Yeah, we have Prashant. And I tell you what, I normally tell people don't watch the US market overnight. In any case, you have to trade at 9:15. I broke my rule yesterday. I stayed up till 1 a.m. And actually, I'm glad I did because the kind of bizarre moves that you saw in the US market overnight.
Yeah.
Initially, when the statement came, it looked quite dovish. The market rallied 500 points, and then came Mr. Powell, right, who clearly, maybe wants to show that he is the boss. So I think he sounded very hawkish, and the way he made the statement that he would rather err on the side of over tightening than under tightening, I think that really was something interesting, and most risk assets sold off. But buy on dips has worked in Indian market, and my sense is that at least the first dip should be bought because it is something which has worked. So it's weekly options expiry as well. So I'll give some levels to watch. 18,000 put has 76 lakh shares open interest with a premium of 37 rupees. So what it means is that somewhere around 17,960, and if you map the SGX Nifty, that's what it's indicating. It opens right at that support of 17,960. And if you remember the day of the Axis Bank block deal, the low of the Nifty was 17,899.9, which is roughly 17,900. So from risk reward point of view, on the expiry day, maybe it makes sense to try and see if that buy on dip trade works. If 17,900 goes, then perhaps you're out of it. In that case, the next support to watch, by the way, is 17,723. The only issue is today you will see massive selling in IT for two reasons. A, Cognizant's numbers look really ugly and the guidance. And two, if you see the overnight action in the NASDAQ and the fact that a lot of these IT stocks were making a comeback because hoping that the terminal rate would be here soon, that is not there. So IT, I think, today could be punished. In fact, I wouldn't be surprised if IT index goes down, say, 3% or so. The bank Nifty in that case would really have to take over the mantle. It's strong despite the recent weakness. The well-defined boundaries are from the options data, 40,500 and 41,300. So somewhere around 40,600 maybe could be a good entry opportunity. And the reason I say that is the point I made yesterday as well. HDFC Bank has started to see massive traction because of this FI buying. So my sense is first dip might be bought, but if there's a second dip, then you want to see where it goes.
I hope it's a one-off. The first and last time you're staying up till 1 a.m. to watch the US markets, right?
No, but at least on big days, Sonia, the kind of, the market moves there. So, just yesterday was a day I felt like, maybe, it should have been there on the NASDAQ floor, reporting from there. Would have been a completely different trail. I think the US market moving like that. There's a chart, I don't think I can show it here. There's a chart which maps the Fed fund terminal rate, and it was around 5%. And then when the initial statement came, it went to 4.9, and then when Powell started to speak, it went up to 5.1. It's like, it's almost like a mid-cap chart. And you're talking about the most liquid, biggest market in the world behaving like that. We are living in some crazy times.
There was a trader, I guess he was a bullish trader, who said that it feels like extended Halloween. It's scary to see all these volatile moves, and then there comes a hawkish Fed. But thanks a lot, Anuj, for joining in. Well, the pre-opening rates are kicking in, and they're not too bad. The Nifty is down about 134 points. IT is the one that's taking it on the chin. HCL Tech is down about 2.5%, and then you have HDFC Bank, JSW Steel, Hindalco. SBI comes out with numbers on Saturday. Ahead of that, it's a tad bit soft, so do keep that on your radar as well. But more coming up in a bit. We have Ashish Chaturmota, the Director and Head of Research at JM Financial Services, who joins in now. Ashish, good morning. Your thoughts on the market and what are the stocks that you're looking at?
Hi, good morning. So I think, broadly, our markets are showing very strong resilience, and and as Anuj rightly mentioned, it's typically a buy on dips market. Structurally, we feel that 17,800 is an area where a lot of put writing is being seen. So clearly 17,800, 17,750 is going to be area where a lot of, buying interest could start coming into the market. So I think keeping that in mind, banks are going to outperform this rally, and we have selective, capital goods space stocks which are showing very strong strength. So I think we need to be stock specific. Within large cap banks, HDFC Bank is showing very strong trend. Here one can initiate a long, keep 1480 as a trading stop loss. We expect stock to see move towards 1580, 1600 kind of trajectory. ITC is showing very strong trend within the FMCG basket, and I think the way OI buildup is happening, the way delivery volumes is picking up in the stock, and at current levels also, stock is yielding almost 4% dividend yield, it looks like ITC is a stock to be bought on dips. Keeping 348 as a trading stop loss, one can initiate long in ITC. On upside, 370, 375 is a target we are looking in a shorter term time frame. And in the capital goods space, Larsen and Toubro looks very, very promising. We have seen very strong consolidation for last 6 months into the stock. And now we are seeing very strong price volume activity coming into the stock. So keeping 1975 as a trading stop loss, we are looking for 2100 targets in Larsen and Toubro in the immediate short term.
All right, thanks a lot for that. So we're just sort of counting down to the opening for the market. A couple of stocks do deserve mention though. M&M Finance, the disbursals, monthly disbursals have been pretty strong for M&M Finance, up almost 29% month on month. So do keep that stock on your radar, up 3.5% right now. And something like an MTAR Tech, where the revenue growth was pretty strong, almost 40%. That stock also on our radar. But Gati is what we're tracking right now after the Q2 earnings. The operational improvement continues for the company. This quarter, the EBITDA was up 25%. Margins have also expanded to 4.6% versus 4% last year. Remember, Gati's target margin by Q4 is 9%. We have Pirocha Sarkari, who's the Chief Executive Officer at Gati. He joins in now to talk about the way forward for the business. Mr. Sarkari, good morning and thanks a lot for joining in. First on the margins, right, since we mentioned it up front, you have a target of 9% by Q4. Are you on track to meet it?
So first of all, good morning and great to be back after a 3-year gap.
Sure.
I have been away from CNBC for 3 years now. Yes, our EBITDA performance for this particular quarter has been good. We have grown the EBITDA quarter over quarter by 58.8%. And if you look at the half-year growth, it has been more than 200% growth. And when we talk Gati, we should talk Gati's express logistics business, because there is another business which is a fuel pump business in Gati, which we have identified as a non-core business, and we'll be shifting that out. Even if I add consolidated numbers, the EBITDA is at 28 crores with a 53% growth. We definitely are on track as per our guidance that we had given earlier. And I think we have done a tremendous job on operational efficiency in both the first and the second quarter of this year.
All right. So, hi, Mr. Sarkari. Good to have you back on the channel. So, as you said, you're looking at that margin target of 9%, right, by quarter 4. That's in the next 2 quarters.
Right, absolutely.
Okay, got that. Also, the other goal that was given out earlier was you're going to be looking at an annual run rate of around 3,000 crores odd. You're currently around 450 crores on a quarter basis. When do you get to the 750 crores on a quarterly basis? Or you could give us a roadmap as well, say 550 crores in the next couple of quarters or the next few quarters, such that the annual run rate you get to around that 3,000 crores.
So I have said this before, our exit rate of financial year 26 will be at an annualized run rate of 3,000 crores.
Okay.
One must understand that All Cargo has bought out Gati just about over 2 years back. And one of the imminent initiatives that we had was, of course, to make Gati great again. And I say this because Gati has always been an iconic brand in the Indian industry. So we've done what is required as a cleanup in Gati. We have sold off a lot of non-core assets. We have developed new infrastructure. And I think we are ready now to grow this business to the next level.
All right, Mr. Sarkari, but could you give us, if FY26 we get that around 3,000 crores, but in the near term, say for FY24, what kind of a number are you looking at? You're saying that margins are going to go to 9%. Do they go to double digits? I ask this because you have a listed peer that gets far higher valuations because of the margins they do. TCI Express, I think they get 15, 16% odd margins. So when do you go to double digits? Your targeted ROC and revenue run rate, should we work with around 500-600 crores for FY24?
So I'm not going to give any guidance for FY24 over here, but I can definitely tell you that a double-digit EBITDA will be achieved by next year, third or fourth quarter.
Okay.
All right, double-digit EBITDA by the last quarter, basically, right? Next year. That is FY24. Mr. Sarkari, just to provide us with an update on what is the schedule on opening of some of these mega hubs that you've been talking about. There was, I believe, some delay earlier. What have you done in this quarter and what's the plan?
Absolutely. So the plan was to set up 8 mega hubs to enable us to grow the business to the next level. We have, as you know, developed the Farooq Nagar, the North India hub last December. As we speak here, we are shifting into the Bombay hub, and that will be operational as of today, tomorrow. We have in the interim also set up Nagpur and Guwahati. These are our central and northeast hubs. And come January, we'll be setting up Bangalore. Now, it is very important in our business to have the right infrastructure. Otherwise, we cannot grow the business because our business is very operational intensive. So just to give you an idea, we move approximately 100,000 tons of material every month in Gati, and that's huge volume. And if you don't have the right infrastructure, which we call hubs, cross docks, it becomes extremely difficult to turn around trucks. So we are on the right path. And I would say by the end of this financial year, we would have our first lot of infrastructure ready so that we can take on the growth.
Yes. Okay. Very quickly, sir, before we let you go, we're getting to market open. Could you tell us your market share was around 8%? When does it go to the mid-teens? Point number one. Point number two, just clarify, is there a merger on the cards with All Cargo?
So market share in this industry is looked at from two angles. There is an organized market and an unorganized market. And if you see the organized market, which is about 25,000 crores worth of market, then from that perspective, our market share would be about 8 to 9% today. Again, one has to understand that it has been 3 years of cleanup, and therefore we are now ready to hit the market in a larger way. With regards to your second question,
merger with All Cargo.
So Gati is a listed company, and we will remain an independent listed company in the near future.
All right. We look forward to speaking with you more. Thank you very much for joining us, and good luck with all that you outlined as your business plans. All right. That's Gati for you, but we are approaching market opening. Sudarshan is back with us for the 9-10 call. Sudarshan, good morning again. What do you have?
Well, the Nifty is a buy once it consolidates after the decline. Ultratech is a buy with a stop under 6,700.
All right. Well, that is on Ultratech Cement. Mitesh, how about you?
I will go with the buy on Sun TV with the stop at 532 half for targets of 570.
Okay, got that. Did you say Sun? You said Sun TV, right?
That's right, yes.
Okay, Sun TV, got that. I just wanted to also point out Bajaj Auto is one of the stocks that's trending in the green this morning. Morgan Stanley has upgraded Bajaj Auto to an overweight from an equal weight. Now, it's very interesting. They have a price target of 4,309, which is almost a 15% upside to the current market price. Now, this is a contrarian call because, Bajaj Auto has been going through a lot of issues with respect to exports. But Morgan Stanley says that the export slowdown risks are largely priced in. They've built in a 20% decline in exports in FY23. And Bajaj Auto now has a strong portfolio of brands, whether it's the Pulsar, the KTM, the new Triumph launch in 2023, and that should help the business gain share in the premium motorcycle segment. So we just pulled out the numbers in terms of the domestic sales, and one very interesting trend is that the last 3 months have seen a good pickup in domestic sales for Bajaj Auto. Just look at that trend. From an average of about 1.5 to 1.8 lakh units, it's gone all the way to an average of 2.5 lakh units. So clearly the domestic market is picking up, and that's perhaps something that Morgan Stanley likes. Hence the stock as well is trending in the green this morning.
Okay, all right. Well, that's about Bajaj Auto. By the way, we're just getting into market opening. It's not as bad actually what the SGX Nifty was suggesting. SGS Nifty was suggesting 160 to around 170 point downtake. That's not really the case. We're down close to around 110 points. So a deeper opening actually would have been preferable for the bulls because you're getting a sharper downtake to enter into the markets if that was the call. Well, the Nifty Bank is well down close to around 270 points. A couple of stocks that deserve special mention from the Nifty pack itself. Bajaj Auto, as Sonia mentioned, well, that's done pretty well. But we have a whole host of companies that will be reporting to their numbers. The rupee as well, moving towards that 83 odd mark, 82.90 as of last count that I checked. Well, the bell rings, and in fact, we move straight to the top trades of the day. I think a few stocks that are reacting initially itself. You have Dalmia Bharat. Well, that one should come up for you on the screen. That's moving around, I think. That's down close to around 0.5% odd. Hindalco has taken a knock because metal prices, obviously, they got pulled back a little bit overnight. Tech stocks, remember, they have had the big run, and that was the call that we made earlier today as well. The Nasdaq was under pressure. In the last 40 days or so, that index is up close to around 8%. Well, that's pulled back a little bit. Tech Mahindra, Infosys, both of them are down. Wipro as well has come in for some profit taking. Bajaj Auto, as Sonia mentioned, that's the lone stock, Sonia. That's in the green, actually, with a gain of close to around 0.5%. Mid-cap index faring a tad bit better, but the Nifty Bank under some pressure.
And not bad, you know, look at the opening. I mean, despite everything, right, despite that big gap down opening that the SGX was suggesting, this is not a bad outcome at all. It's just about an 80-point cut that we're seeing on the Nifty. The mid-caps, in fact, are hardly down about 45 odd points. The stock of the moment in the broader markets is M&M Financial. Just look at it go, 7% higher now on the back of a strong disbursement growth that M&M Financial has seen. Apart from that, Karnataka Bank, after a solid set of numbers, is seeing some more upside, so up almost about 4.5 odd percent. MTAR Tech, it's held on to its guidance, and the numbers are looking good this time. Revenue growth of almost 40%. So MTAR Tech is up 4.5%. Varun Beverages is up almost 3% after a good set of numbers. So this market continues to reward good earnings with about 4-5% gains. On the downside, Manali Petro reported weak numbers, down about 11 odd percent. You have something like a Zomato that's under a bit of pressure right now. Dalmia Bharat, of course, that Nigel was referring to. Over there, volumes are picking up on Dalmia Bharat, so don't lose sight of that. But still, the price action is not too much. And a couple of other names, I think it's, you know, largely the NBFC space, M&M Financial, followed by a couple of others that are doing well. Otherwise, not a bad opening for the market, you'd have to say, given the context of what happened globally.
Yeah, I mean, absolutely. So it'll be interesting to see whether, you know, opening like this gives, today at least, the opportunity to dip buyers or those looking to kind of sell the market. Because we're down, what, 70 points, right? 65, 70 points. Will the dip remain bought, or there is perhaps one more leg coming? I would kind of go with the latter, that maybe at some point in the day we get some more pressure, at least one leg. We'll see. The big sort of unknown is whether the kind of flows that we're getting, and a lot of ETF money has also been coming, that continues. I mean, that could change the game. But otherwise, I mean, overall, if you look at all indicators, it does look like risk-reward perhaps is a little unfavorable at these kind of levels. 18,114 is what we have. Market breadth, by the way, is exactly 1:1. So at this point in the day, Infosys is down about 1.33%. Hindalco is down about 2.5%. There is Tech Mahindra, which is down about 1.25%. And so on and so forth. Relaxo is down 5%. I mean, talking about some of the larger movers, Nykaa, which is pulled back from under 1,000 rupees to 1150, is down about 1.5% as well. On the upside, I mean, there is M&M Finance. I think we already highlighted that. Karnataka Bank started 19%, ended about 19-20% higher. It's up another 3.5%. Bharat Forge, which we highlighted, the Class 8 truck orders, that's up 1.5%. And Piramal Pharma, which is out of T2T with a 20% circuit limit now, that is up 1.7% as well. Varun Beverages is another one. Super set of numbers recently, 2.5% higher. Reddington, we saw a move yesterday. There is some follow through with about a 2%. So these are things you may want to keep an eye on. MTAR Tech, of course, also reported numbers. That's got about 2.5% in gains as well. We're down about just 60 points at about 18,000. and 22. Sonia.
And this is such a resilient market, right?
Yeah.
I mean, if someone would have woken up in the morning thinking that it's only a 60-point cut that we'll get away with, I think they would take it with both hands. The bulls, that is.
Oh, absolutely. I mean, it's getting better, by the way. Just 55 points lower now. Sanjeev Prasad is with us, Managing Director and Co-Head Kotak Institutional Equities. Sanjeev, great to have you with us here on the program. Thank you very much. Just put all of the different elements into how you are kind of interpreting the market situation now, Sanjeev. We're coming off this Fed decision and these huge moves last night out of the US. Go on.
A very confusing picture, to be honest with you. Yeah, you have a lot of bad news, I guess, as far as the global situation is concerned. You have a situation where both Europe and China seem to be, headed into a serious slowdown for sure, if not an outright recession. US is probably on the brink of a major slowdown, if not again a recession. So far, the data points in the US have still been coming to be fairly strong, which means the US Fed has no option but to keep on tightening. And you saw that, last night it raised rates by 75 basis points and seems to be signaling more rate increases going forward. And on the inflation part, it looks like, inflation is becoming a lot more entrenched than what people have thought earlier. And that's a big risk for, I guess, all markets. Central banks have to continuously be raising rates going forward to bring down inflation. You could have a combination of, inflation sustaining for a longish period of time and, growth sort of struggling given a period of high interest rates. So in that backdrop, India is doing phenomenally well, I would say. Despite all the bad news, doom and gloom overseas, India continues to do quite well. Valuations are quite stretched in India, but I guess if, so much of bad news has still not broken the market, I don't know what will, So I guess people are very optimistic on the medium-term prospects of India, which I think is fair. And in that context, people are willing to probably overlook some of the negative news coming out of the, the developed markets. That's also China. What could break the sentiment? Obviously, if you have a prolonged period of high interest rates and low growth, that will have some rub-off effects on India also. Second is if domestic inflation surprise on the upside through a combination of maybe, let's say, higher food prices and global fuel prices. We still don't know what's the end game of fuel prices when it comes to winter in the northern hemisphere. So wait and watch for that. If you see some earnings on straightforward. Yeah, sorry.
Sure. No, I take your point, Sanjeev. I mean, it's a fair point, right? That given take everything and all the problems that have been thrown at the Indian markets, here we are sitting close to record highs. And I guess another way to look at this Fed news is that now the poison is out of the way. I mean, people know what to expect. It's the bad news that has hit the market and the market has digested it and now moved on, right? What do you think the next trigger could be? I'm asking you from an earnings standpoint because this time, surprisingly, earnings have picked up quite a bit, whether it's banks, technology, despite all the problems have done well. A lot of mid-cap spaces have reported good earnings. What has the big takeaway been for you? And would you raise your Nifty EPS targets for the full year based on earnings?
Surya, the points you mentioned, they are very well known that banks would have delivered anyway very, very good numbers because A, your loan loss provisions are coming down significantly. And B, you are seeing this lead lag effect of, faster increases in the lending rates compared to your, borrowing or deposit rates. So the names have expanded tremendously for the banks. And that will probably sustain for the next 2-3 quarters. The problem is if you look at numbers versus estimates, they are not that great. If you look at, for example, Nifty 50 index, I think almost 30 companies are reported, and versus our expectations, in fact, net profit numbers are down by about 4.5%, with serious misses on metal mining and case of oil and gas. You had some beats in case of Axis Bank and Bajaj Finance on the financial space. Marginal, beats in case of IIT, some of them, although they promised quite significantly. But that's about it. So I don't think we are seeing earnings upgrades from where we are. In fact, we have cut our earnings numbers slightly through the result season. And, if global slowdown continues, I don't think, we have much scope of earnings upgrade. So, the market is very fairly priced, looks like very finely priced, factoring a lot of, good news. So I think we have to be careful about, any further earning downgrades, I would say.
Hi, Sanjeev. Morning. But how do you approach this market then? Which are the themes that still are reasonably priced and maybe for a longer term you will look to get into?
The longer term, I think most things are okay in India. If you're taking a 3 to 5 year view, most things will do well in India. That's not an issue. The problem is the starting point when it comes to valuations. We are quite positive, and we have been talking this for about almost 2.5 years now on the whole capex cycle and so on and so forth. But look at the valuation of the capital good companies there. I mean, you have a ABV which is 85 times, 1 year forward. Used to go out 50 odd times, in March 19. We have seen massive relating for all the companies which could potentially benefit from any big capex cycle, which is what we expect going forward. Same if you look at the banks, they're still reasonably priced, I would say, at least the tier 2, tier 3 banks and NBFCs. Presumably the good news will continue over there because we don't see any risk of credit cycle. Credit quality, worsening at this point in time. Credit growth looks okay. Could possibly see some pressure on NIM starting to emerge maybe 2-3 quarters later, but that's okay, I would assume. Beyond that, struggle really to find any value in this market. IT pharma looking reasonably fairly valued. You have headwinds of, clearly a slowdown in the US, if not a recession. Most of the consumer names are more than fairly valued, and most are fairly richly valued. Consumer discretionary names are super expensive. So it's just a struggle in this market, to find any decent quality names at reasonable valuations. Barring banks, I really don't see anything at this point in time.
Harish Krishnan of Kotak wrote an article, and I think it kind of gels with the point that you're making, that maybe, Sanjeev, you need to, I don't know if you agree with that, if you're buying at these levels, you need to really be committed to holding for longer term, right, Sanjeev?
Absolutely. If you're buying, let's say, an Asian Paints at 60p, the chances are you will probably not make too much money, at least over the next 1 or 2 years, because the stock would go through a period of derating, especially if the new competition starts to get its acts right. You have Grasim, which is making a big foray in paints, and if you start seeing some market share loss from Asian Paints, which is inevitable, some amount of compression of both margins and returns. The stock could probably have a period of derating. It's a fantastic company, but buying at 60p, given all the headwinds which are there, I'm not very sure whether you will make money over here. That's the challenge for so many stocks now.
Okay. By the way, just look at M&M Finance, right? 9% higher now and big moves in terms of volumes. It's already a 42% rise that M&M Finance has seen this year, and that's no mean feat. These NBFCs have come back in a big way, Sanjeev, especially the ones that cater to the auto market. And we've seen a blitzkrieg of launches, right? Whether it's in the SUV space, in two-wheelers, in electric vehicles. This whole pocket has gained. But now if you had to sift the wheat from the chaff, which are the ones that still have both growth as well as valuation headroom?
Yeah, I think most of the NBFCs are pretty cheaply priced even at this point in time. If you look at M&M Finance, today it has gone up, but until yesterday was about 1.4 times 1 year forward book. So even if you take today's jump, it will be about 1.5 times, which is still quite okay. Shriram, both the Shriram twins are at about 1.1, 1.2. Clearly undervalued, but obviously there are issues around reorganization of the firm and so on and so forth over there. So we'll see, what exactly plays out, how does the merger, integration, etc. take place. But stocks are reasonably cheap, I would say, as far as NBFCs are concerned. And if you see a decent credit cycle going forward, that is, credit growth. And as I was saying earlier, at least at this point in time, doesn't look like you will see a rapid deterioration in asset quality. We're just coming out of the cycle. And if there are no external shocks, maybe NBFCs have, still a fair amount of upside left.
Well, Sanjeev, since we're talking about the financials as well as the banking theme, I had a two-part question for you. One is on the PSU banks. They have actually, the PSU index has been the biggest outperformer this year from the Indian markets. Do you think more money should be flowing towards that side, or will you stick to the large private sector banks? Point number one. And also, I think in the past, you've been positive on the credit card spends. We had the management of SBI Cards that spoke to us earlier today. Any view on that?
So as far as PSU banks are concerned, look, they are still very cheap, even though they have seen a fair amount of rating over the last 6 months, 12 months. They are still incredibly cheap. You look at a Bob, still not at one-time price to book. You have Canada at about 0.7. I think both PNB, Union Bank are about 0.5. So I think there's still some scope for rating from where we are. And the good thing is at least the PSU banks rating on fair amount of deposit base relative to credit. That is, the credit deposit ratios are still very, very low. So at least they don't have this, problem of scrambling for deposits, which some of the private banks will have to, I guess, face going forward, because they're sitting already high credit deposit ratio. You're not seeing deposit base in the country growing the way compared to the growth on the credit side. So at least PSU banks seem to be in a decent position where you could see some expansion NIMs, going forward, and valuations are very favorable. The biggest risk for PSU banks in any side has been, big increase in credit cost at the end of a cycle. I think we're just at the beginning of cycle, so we should be quite okay on that part. So yeah, so PSU banks look okay. Some people, will never invest in PSU banks, but people who have the appetite at this point in time, valuations look quite favorable, I would say.
Okay, valuations look favorable for PSU banks. I think it's a theme that people have spoken about since Diwali, right? On almost all our Diwali shows, PSU banks was a common theme. Let's see what SBI delivers on Saturday. That will be the interesting bit. It's generally the barometer of what happens in the PSU banking space. But Sanjeev, a pleasure speaking to you. Thanks a lot for joining in on the show. Well, for the market, folks, just look at where we are right now. The dips have been bought, as we were discussing earlier in the morning. The Bank Nifty is now in the green. The mid-caps are well in the green. And this is a market that's not wasting any time to use this global weakness to get into, individual stocks. Lots of stocks hitting fresh highs as well. There is ITC at a fresh 52-week high. There's Bharat Forge after very strong numbers from the North American market. There's something like a Tube Investments and Torrent Pharma as well. That's at a fresh high. But let's talk about consumption, because Varun Beverages posted a very strong set of earnings. The revenue growth was up 32% this quarter. The company's internals also looked very strong. India organic volume growth rose 22%, and the international business is seeing a volume growth of 31%. Ravikant Jaipuria, the chairman of Varun Beverages, is joining us now. Mr. Jaipuria, good morning. And first of all, from the entire team, happy Diwali to you. It's a while since we've spoken, and it's good times yet again for the consumption industry. So thanks for being with us on the show. Tell us a little bit about how the quarter to come is panning out. What kind of consumption growth are you seeing? What are the big trends looking like for Varun Beverages?
Well, I think we've had a great 9 months going forward. And as you see, with the markets opening up and the Diwali and the holiday season starting, we've had a great start, and the fourth quarter is also looking quite promising. All our new products, especially our energy drink, is really flying out of the shelves. And the go-to market has opened up after the pandemic. So we see robust growth coming in the beverage industry. We are really not seeing any challenges actually coming forward.
No, got that. Mr. Jaipur, it's good to speak with you. Thanks very much for joining us. Prashant here. What about competitive intensity, sir?
Hi,
we are seeing some very large players entering the segment, reviving old brands. Reliance, for example. What is
yes.
How is this likely to impact you? Yeah.
Well, I think the industry is growing, so I think more players are thinking it's becoming a large industry, so a lot of people want to join in. And India is growing at a huge pace, so I think there's enough room for everyone to come in. So I think the growths are there to stay, so I think the more the merrier, I guess.
Mr. Jaipuria, will you have to do anything different from what you've already been doing? And maybe spend more on advertising? That's going to be a big part of the push. It always is for the industry.
I think we need to keep...
Yeah.
Well, I think we need to keep on having new innovations, having new products, make sure our go-to-market keeps increasing, our chilling equipments keep on increasing. And I think it's basically, India is still so much room to grow that it's basically how far can you keep going in the interiors. And with the power situation improving, there is only the sky the limit actually. It's just how much you can improve your distribution. And there's a long way to go. I think in the next 5 to 10 years, I think it's only distribution which is going to really improve your market shares.
Hi, Mr. Jaipuria. Good morning. This is Nigel on this side. I'm looking at Sting.
Hi, Nigel.
That product has clearly done very, very well, and it's contributing, I think, roughly around 9% of the domestic volumes as of last count. How big can this get?
Right.
Because volumes are higher out there, realizations are higher as well. What's the targeted contribution from Sting?
Well, we are looking at hopefully around 15% next year. So Sting can be, and also energy drinks are becoming large worldwide, and energy drinks are becoming close to 14-15% of the total industry portfolio. And so there is a huge room still for Sting to grow. Will it be 14-15% of our portfolio, or will it be larger? How the competition is going to react or able to bring new products against it, that has to be still seen. But I think fundamentally there is still a lot of headroom for Sting to grow.
Okay. So give and take everything, sir, can you give us some numbers on what the volume growth or revenue growth could be for the company, not just by the end of FY23, but what could a compounded growth be, say, over the next couple of years?
Well, I've always said we don't want to give exact numbers, but I think double-digit growths look very possible, and we definitely believe we should do better than that.
Okay, so double-digit growth is what you're talking about, not just for FY23, but FY24 as well?
That's right. That's what we are looking at.
Can you quantify it a little more for us? I mean, the organic growth for you in the India business has been over 20%. So, will it be as strong as that? Can you do better?
Well, I wish we'll keep trying, but I would only like to commit double-digit growths look pretty reasonable and doable, and better than that, we'll always keep trying.
Mr. Jaipuria, just to clarify, Sting will contribute, the target is 15% of your domestic volumes, is that correct?
That's right. That's what normally the energy market is. If you look at around our countries, even Pakistan, Vietnam, so this is what the energy drink portfolio is. Yeah.
All right. So, Mr. Jaipuria, I ask you that because that's better realizations, right? That's positive on the margins. Now, we have seen input costs cooling off. Resin prices as well have been cooling off. Is there an upside risk to the margins from here on? Do you see margins improving because you're guiding for good growth on the top line?
I think we
are product mix as well, and volumes will spike up. Go ahead, sir.
Well, we are one of the highest margin players in the world, and I think to expect better margins than what we are getting will be really asking for too much. If we can sustain these margins going forward, we should be quite happy. I mean, we are one of the largest and the highest margin players in the world, in the people who are listed.
Absolutely. I guess in a challenging market like this, to have 22% margins is no mean feat. I take that point entirely. Just to tell us a little bit more about market share, what's the current market share of PepsiCo in India and what's the target like?
Well, the exact market share we haven't received yet, but we are still a second player. Coke is a dominant player, and we are the second largest player in the country.
All right, Mr. Jaipuria, thank you very much. Great speaking with you, and I appreciate you joining us on the program today. I look forward to speaking with you again. So, you know what goes well with Pepsi? Bhujia.
I was going to say, Prashant, since you've stopped drinking coffee, perhaps you can switch to the energy drinks.
Sting, huh?
Sting.
Yes. Absolutely. I mean, we're speaking with one of the largest players in that in the Bhujia segment. I mean, a brand that pretty much all of us, I mean, very few in India are not really are aware of, Bikaji Foods International is coming up with an IPO, and we'll be speaking with the management of the company on the IPO. What are the growth prospects looking like? That conversation coming up in just a bit.